Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are still trading indecisively, but slowly above the T-line. This allows for the aggressive trader to easily identify breakouts using candlestick analysis. As we can see, the Dow has pulled back in the overbought area, back below the T-line, but note the nature of the trading below the T-line, very indecisive. That leads a little bit of suspicion. Now, obviously, below the T-line says the probabilities are pretty strong that you're heading in a downtrend. However, the NASDAQ and the S&P 500 opened lower today, but then closed back up above the T-line using that same analysis. As long as you're closing above the T-line, it has to be assumed that your uptrend remains in progress. This would also kind of alert everybody to the fact that if the Dow is trading indecisively below the T-line, maybe you still look for bullish sentiment. Now, this allows us to take advantage of breakout situations. As we saw in PLTR, this was the alert. Now, when they gap up, especially on a kind of a best friend signal, that should immediately indicate to us that there's a major change of investor sentiment. You can see how long this trade lasted up until you saw a sell signal and a close below the T-line. But this is what instigated new interest or indicated there was new interest in this stock price. So we're seeing that type of thing right now in VCIG. There was your best friend signal. There was your consolidation. There's new buying coming in. This is for an aggressive trader that wants to be alerted when something new is coming into a trade situation. Look how it traded indecisively for months, and now something new has come in. This is where you use the RARE process, research, analysis, reverse engineering, that when something like this happens, you go and see what the news was that started causing that new interest. You can see the consolidation. You can see the new buying coming in, still consolidation. However, the Doji rule says if they open this positive tomorrow, you can see the J-hook pattern setting up and a high probability that your next move could be a very strong move. Anytime we see a pattern breakout, it is illustrated by the fact that you're going to have a big candle move. That tells you exactly what we would expect coming out of a fry pan bottom. And note where it broke out, right at a level, the 50-day moving average that everybody else was watching, which kind of coincided when this fry pan bottom pattern was setting up. So you use that information because when you see something like this, instead of thinking you're chasing something, you've got to realize that the investor sentiment has greatly gone bullish, breaking out, slow curve, supporting off the 50. This is the expectation. We saw that same thing in Overstock today. Big gap up, broke out through this level, broke out through the resistance level. Wave one, wave two, gap up into wave three. This puts you in situations where instead of thinking, oh, I don't want to be chasing after this, that you at least conceive the fact that there's new interest, there's going to be more upside. These are the type of things that we illustrate in our chat room every day. And the nice thing about identifying these patterns is because you've got hundreds of eyes, pairs of eyes looking for the same type of pattern breakouts, it allows you to be alerted to these type of situations early in their price move. That'll be it. We'll see you in the chat rooms.